We're going to take a super quick look at PayPal charts today because I want to talk a little bit about the earnings and take a look at the numbers for the company. First off, we have fallen under this diagonal trend line, the black one. Now, I don't think this sell-off particularly happened because of anything to do with PayPal. There was a rather large market-wide sell-off yesterday, so I think that's mostly related to that. Fintechs especially seem to have got a bit of a battering with tech. So they kind of get lumped in when it's convenient for the market to do so. However, price is holding for now at this volume shelf. I do like that, but any drop underneath this is going to be probably down to $55 at this historical level. Not ideal, but it will provide a nice entry point for anyone that wants to get in. This is cheap. I do love the company, and I don't know why people hate it, but I'm very excited to see what they can do. Metrics on the indicators. RSI is flat. The death cross, nothing really happening. I was hopeful the momentum would carry the price higher. That hasn't happened, so this is still open. And flow is flat. On the weekly chart, we can see here it was still in this super tight range, about $61 to $57. So it's definitely basing here. If earnings come in okay, I think this one will ride. Obviously, we haven't seen that much in earnings season yet, so don't bet on that. But they've got relatively easy comps. If we go back to the daily, I can show you. Estimated EPS, 98 cents. That's nothing. They should easily be able to get that. And the revenue is only slightly higher than it was. So there has been a bit of sandbagging going on with this company. So hopefully that sets things in good stead. Taking a quick look at PayPal's open options interest. You can see the strikes are pretty much in the ranges that PayPal's been trading in for quite some time. So it looks like people are just looking to capitalize on the range bound aspect of it. If we put this forward a week, I think earnings are on Tuesday, so the next one would be the 2nd. This is going to be a really strong resistance level. If we do have a moderate pop, we're probably going to see $64. So nothing too exciting. But higher than that is 69. That's going to be a much harder level to break, and obviously we've got this historical resistance here forming. I did want to have a quick look at PayPal's numbers as well. We've got earnings coming out, so I thought we'd squeeze this in. The market's obviously going to be looking at customer accounts. Now, I think Netflix also has this issue. It's a bit of a silly metric, really. There's a reason why they're taken out of their earnings reports. The market really should be looking more at stuff like total payment volume, and I think they are looking at transaction margins. There's a lot of people hoping that this inflects. I'm not confident it will inflect, but it's nice to see things have been stabilizing. So if that can continue, that's a thumbs up. Everything else is looking really good. Net income is good. I think this is only going to improve with the new products that are coming out. Revenues slowly ticking up, grinding away. Share count is being sliced and diced. This is going to keep coming down. Be interesting to see what the comments they're going to make about buybacks. The more they buy back, the higher EPS goes, which also takes us back to the really low EPS. What did I say? 90 something cents. That's going to be really easy to beat with the amount of shares they're buying back if they just continue executing the business how they have been. Operating expenses coming down. Excellent. That does make me want to talk about the employees though. This 27.2 thousand, that's insane. That's a huge workforce. A way to look at this is SoFi. Their business runs on less than 5,000 employees, so there's no reason that PayPal should have over 20,000, and even that be considered large. So I think a lot of people will want to hear about staff cuts and more trimming that they could do. There's been a lot of management shuffles, so I think as time passes, they're going to work down through the company and make some more cuts there. Also, another thing I wanted to look at was the key charts page. Historical margins. Obviously, these are starting to pinch. A lot of people don't like that margins are getting worse. We're seeing this across the board in a lot of companies, especially like companies like Tesla and such. It's mainly a sign of the times, but PayPal does have some great new products coming out that will really be able to start expanding this again. The adverts business that they're planning, that should have huge margins, and there's so much expansion room there for them. Pretty excited about that. That's not going to be hitting the bottom line for a few quarters, I don't think, but it's definitely something to keep an eye on. Operating leverage, gotta love this separation here. Payment transactions, good. Transactions per account, good. Basically, we just want to see a continuation of this. It doesn't have to be in a straight line. As long as the trend is up, I'm happy. Take rate's been coming down, but we can offset that a few ways. The only other thing to look at really are the earnings expectations for PayPal in the next 3 quarters. It's still trending up. Nothing exciting. I don't think these numbers have the new products priced in at all. I think these are just continuing on. If you want to take a look at my full PayPal thesis, it's on my website, www.thecraftytrader.com. On there as well, I think I've got the last earnings breakdown on. So that's quite useful if you want to see how they did last time. I still think PayPal's cheap, even if none of the new products work. It's definitely undervalued. All that's left really to say is a little word of warning. We're seeing it a lot this earnings season. The numbers are coming in mediocre for most companies, even if they are a beat. The result is people are looking at the guidance and seeing that a lot of these companies are projecting a bit more weakness going forward, and that's causing a fair bit of sell-off in some stocks. Not all of them. Some are having not great numbers, but for the most part, even if PayPal does have good numbers, that doesn't necessarily mean the price is going to go up. We need to watch out for weak guidance. Historically, the last 2 quarters, guidance hasn't come in great. I think that's sandbagging, really. Helping the new CEO look good and all that stuff. Politics happens everywhere, but that's going to be a bit of a driving force, so we'll see how that pans out.